This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. India, the world's third-largest crude consumer and importer, has approached Guyana's government about a possible long-term deal to buy the South American country's oil, a Guyanese official said. India has expressed interest in buying one of the 1 million barrel cargoes Guyana's government is entitled to in order to test the crude in its refineries, according to Guyana's Natural Resources Minister Vikram Varat. If the crude is compatible, the parties could begin talks on a long-term arrangement. India's oil demand has risen by 25% in the last 7 years, more than any other country, and officials there have pledged to use the country's position as a leading purchaser as a weapon in an effort to keep prices low.
Grain exports from Ukraine are unlikely to exceed the volumes previously agreed with the government, Ukrainian Grain Traders Union UGA said on Monday. Traders and the government have agreed that no more than 17.5 million tons of wheat and 24 million tons of corn could be exported from Ukraine in the 2020-21 season ending in June. UGA does not see any preconditions for exceeding the export limits specified in the memorandum between the Economy Ministry and market participants in the current season. The rate of grain exports is much lower than last year, UGA said in a statement.
Moving on to the top news in the energy sector.
Oil fell on Monday on fears that surging COVID-19 cases in India will dent fuel demand in the world's third biggest oil importer, while the end of a force majeure on exports from a Libyan terminal and an expected supply increase from OPEC Plus added to pressure. Brent crude was $1.08, or 1.6%, lower at $65.03 a barrel by 13:29 GMT. U.S. West Texas Intermediate, WTI, crude was down 97 cents, or 1.6%, at $61.17 a barrel. Both benchmarks fell about 1% last week. The market is tending to focus more on the bad news from India and Japan at present, where the number of new coronavirus cases has risen sharply, prompting increased mobility restrictions to be imposed, said Commerzbank analyst Eugen Weinberg.
The OPEC Plus Joint Technical Committee, JTC, has kept its forecast for growth in global oil demand this year, but is concerned about surging COVID-19 cases in India and elsewhere, three sources from the producer group told Reuters. In its most recent monthly oil market report, OPEC raised its forecast for global oil demand growth by 70,000 barrels per day, BPD, to 5.95 million barrels of oil per day. Demand growth is still at 6 million barrels of oil per day for 2021, one of the sources said. The JTC meeting also expressed concern about rising COVID-19 cases in India, Japan and Brazil, the sources added.
Next, we have the top news in metal markets.
Top-grade iron ore with 65% iron content is selling at a record spread over ores with 62% and 58% ferrous content, while the spread between benchmark 62% ore and lower-grade 58% ore has risen to a 4-year high. High-grade 65% iron ore currently costs $66.50 per ton more than 58% iron ore and $33.50 more than 62% ore, according to data from Steel Home, but is still attractive for mills as their profit margins have risen this year. Steel companies are chasing higher production now as they are profitable, said a Shandong-based trader who refused to be named. Demand for low-grade ores is not very good, we are not keen to take those products.
Copper prices soared to 10-year highs on Monday as Chile supply concerns, sliding inventories, a weaker dollar and expected strong demand from top consumer China triggered fresh buying. Benchmark copper on the London Metal Exchange, LME, was up 2.1% at $9,754 a ton at 1600 GMT. Prices of the industrial metal earlier hit $9,765 a ton, the highest since August 2011. The Chile news helped, but there was already a lot of momentum based on a few things, including stocks and the dollar, one metals trader said. Chinese demand moving into the seasonally strong period is another factor. We will now look at the top news in the agricultural sector. Russian wheat export prices rose for a third week in a row last week, buoyed by higher prices in Chicago and Paris on supply concerns, analysts said on Monday. Russian wheat with 12.5% protein loading from Black Sea ports for supply in May was at $265 a ton free on board, FOB, at the end of last week, up $17 from the previous week, IKAR Agriculture Consultancy said. Sovcon, another consultancy, said that both wheat and barley prices rose by $6 to $253 and $239 a ton respectively.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.